Welcome everyone. In today's video, I want us to talk about sources and methods of finance. Businesses can access funds in numerous ways and use different methods to raise funds. So as a business owner, it is crucial to understand these sources and methods into depth so that you'll be able to make a clear or a sound financial decision that will determine the success or failure of your farm. So the following are some of the sources of finance that you as a business owner can consider as you are sourcing for funds for your business. The first source of finance is the bank loan. With a bank loan here, banks can provide loans to customers or to their clients in medium, short, or long term. And at the end of this loan, what the bank requires from you is for you to pay them back the loan with an interest. And the interest that is charged on the loan varies depending on your credit history. The first thing, depending on your credit history, how is your credit history? How were you paying your loans? Were you defaulting or were you paying it on time? And the second thing is, it is also dependent on the length period of the loan. How long is the loan going to be? Is it for a year, 2 or 3 years? So the longer the length period of the loan, the higher the interest rate that is charged. So whenever the loan takes a long time, so interest is always charged, and then you as the owner, you as the borrower will have to pay the lender at the end of the agreed period of the loan. When the loan matures, you have to pay the lender the premium and then with the interest all together. That is the first source of finance. And then the second source of finance is leasing. With leasing here, what I mean it's like you renting your physical assets to people. Your physical assets like equipment and property, you rent to people so that you'll be able to raise funds at the end. So when you rent these equipments and property to people, you know at the end when they are going to give you what? Money. And the money that they will give you, you will even be able to do what? Be able to invest back in your farm, and you can even be able to use it to finance your expenditure, your expenses, all like the electricity bill, the transportation, workers' salary, and many other expenses that you can incur in your company as an individual. And the third source of finance is share capital. With share capital here, it's whereby you as the business owner, you sell some shares of the company to the public. So in exchange for cash, when you sell these shares to the public in exchange for cash, you'll be able to get money that will be able to cater for whatever expense that you want to project. You might be having a project that you want to launch, but you don't have money that will cater for that project. So whenever you sell some shares of the company, you'll be able to get what? Money at the end to help you run your company smoothly. And with that can help you the growth of your company. And the fourth source of finance is grant. With grant here, it's whereby it is a non-repayable fund. So with the grant here, it's normally given by government and organization. And this money or this grant is most times given for some specific projects and purposes. So the moment they give you that money for that project, you as the company or that individual that the money was given to, you will have to use the money for that specific purpose because you had requested or you wrote a proposal or a business proposal to the government or to an NGO and at the end they give you that support. And the fifth source of finance that we're going to talk about in today's video is venture capitalism or venture capital. With venture capitalism, this is where individuals or firms invest in innovative, high risk projects. So what they want in return after investing in your firm, they will need a stake. With that, they will become a part of the business, whereby they will become a shareholder or a stakeholder in your firm. So any business decisions that will be made concerning or regarding the firm, you as the individual, you will have to include them in the business. The next source of finance is overdraft. With overdraft here, banks can let companies borrow money up to a maximum limit as and when it is required. Yeah, the moment you want that money, you can go to the bank and borrow. So most times this overdraft is associated with high interest rate. As a borrower who is looking for a source of finance, who is looking for a way to source for funds, you have to also consider the interest rate that is charged in that on this borrowing. Is it favorable for you? So when you think that it is favorable, you can go ahead and do the borrowing. After knowing the sources of finance, let's also know some of the methods of finance. The first method that we are going to talk about is the equity financing. With the equity financing here, it involves raising capital by selling part of a business or shares. But this does not require you to pay back. Since you're the owner of the business, there is no need for you to pay back, but instead you're going to get profits after selling part of your business. And after getting those profits, you have to share a percentage of those profits with the shareholders of the company. It will depend on the agreement that you people had, whether to share any profit that you make from your company, or you reinvest all the profits back into the business. The second method of finance is the debt financing. With the debt financing here, this is whereby it involves obtaining of loan or issuing of bonds. So although interest must be paid, the lender has no control over the firm or the business. So you as a lender, after giving out money to the person who wanted it, after him borrowing or she borrowing for their farm, you don't have the right over their farm. So any decisions that will be made in their farm, it will not include you. What you'll only wait for is for them to pay you back your money and the interest too. So the third method of finance is the hybrid financing. With the hybrid financing, the mixture of the two, of the equity and the debt financing. So when you're involved in hybrid financing, you obtain some of your money by selling some parts of of your company shares, that is equity, and then you also gain some money by borrowing or by issuing bonds to the public to raise capital for your company. So thank you for listening. I know you as a firm or as an individual and business owner who is trying to look for money, by knowing all these sources and the methods and implementing them, you'll be able to determine the success of your company and make your company grow. Thank you. And then I will appreciate if you would like, comment, share, subscribe, and tap on the notification bell so that in case of any information is dropped on this channel, you won't miss out. Bye bye, see you next time.